I called it Acronyms, Audits, and Jargon. There are a lot of jokes we have internally where there's a lot of acronyms that come from the banks that we don't understand that we have to ask them for definitions on. So, hi, Toronto. We are based in San Francisco. We too are hiring, but if you know anyone in San Francisco, please send them our way. I think is a little bit less relevant for this crowd. So please forgive me as I start to go through some of this stuff. Most of what we do takes a US-centric lens. So if I say something that doesn't make any sense, I promise I didn't mean it. So what does Plaid do? This is the most illustrative slide you could possibly find about what Plaid does. On one side, there's a bank. On the other side, there's an application. So what we do is we build the infrastructure that lets you connect your bank account to an application on the web. The theory being that we all live our financial lives primarily in and out of our checking account, primarily through our bank accounts. Yet financial services and banks, bank accounts themselves weren't specifically developed to work really well on the internet. A lot of the things that bank built oriented around a branch model, a place where you walk into a branch, you talk to a banker, you walk up to an ATM, and you get some sort of service out of that. Yet increasingly, consumers live more and more digital financial lives. And so we look for an app for each thing that we want to do in our financial lives. Plaid bridges that gap with the goal of taking the banking functionality that we might have when we are in a bank branch or talking to a banker and applying it to the internet, giving it to application developers, and letting them build really great things that interface with our bank account. So first, the principle that we took when we started building Plaid was that a bank account is not a vault. It's not a place that you put your money just to take it in and out. It's actually a routing hub. So if you start to think about all of the things that you do in your financial life, let's say you get your paycheck. Your paycheck lands in your checking account. If you want to make an investment with that, then you're transferring it to an investment account to make that investment. If that investment does well, maybe you sell some stocks, then you transfer it back to your checking account so you can spend it. If you have a credit card, you're paying off your credit card from your checking account. If you have subscriptions or bills or utilities, if you're paying rent or a mortgage, whatever it is, if you use accounting tools or tools to do your taxes, all of those things are going in and out of your checking account. And so we took this fundamental concept of a routing hub and we started to apply it to how people will continue to use their checking accounts going forward. It gets really, really complex. So this is a slide that I stole. I did not make it myself, though I wish I had. CB Insights put together this slide, which basically it takes the top half of it just a picture of the Wells Fargo consumer site, and the bottom half a picture of the Wells Fargo business site. And then around it, it puts every fintech startup that is solving one of those problems that Wells Fargo solves. So one of the hard things about being a bank is that you have to be everything to everyone. And what we've seen is that there's this increasing kind of number of microservices that are trying to be just one specific thing to one specific set of people. And so that's what this slide is trying to illustrate. And so one of the natural questions that we get when we come to this slide, whenever we're talking to a financial institution, they're saying, well, interesting. I thought I was the best lender. I thought I was the best checking account provider. I thought I was the best peer-to-peer payments provider. And it's often true. Like oftentimes they are really the best at some of those things. So the question that everyone asks is, well, how do the banks feel about that? Is Plaid disrupting the banks? Is Fintech disrupting the banks? And the answer that we say over and over is that that's not what's happening. The banks themselves are actually entrenching more deeply with their users. As you think about it, the checking account is the hub of your financial life. No one else can have a checking account, only a bank. And so as more and more applications are being developed, they're going deeper and deeper. The consumers are going deeper and deeper into that checking account. That's really the center of your financial life. If you have your Venmo payments going in and out of your TD account, you're not going to switch your TD account because then your Venmo wouldn't work anymore. So one of the things that I thought that we'd do is just pull up and talk about how banks and fintech are working together, at least based on the customer set that we have in the US and based on a lot of the banks that we have relationships with. And just to put that in context, we work with more than 9,000 financial institutions in the US. We have more than 1,000 different fintech products built on top of Plaid. Most of the big names in fintech are using our infrastructure on the back end. And then all of the big banks we have connections with. So how are banks and fintechs working together? So the first one is that the banks are oftentimes building a lot of the models that fintech might have provided previously. One great example of this is called intelligent portfolios. I don't know if you've ever heard of it, but back when Wealthfront and Betterment were first getting hot, I think they had an aggregate about $10 billion in assets under management. Schwab launched this product called intelligent portfolios. It was unique in many ways, but in many ways it was very similar to Wealthfront and Betterment. It was a robo-advising product. And what they found is that they became the largest robo-advisor in the matter of a month. They had more than 10 billion under management, larger than Wealthfront and Betterment combined. And they did so based on taking people that previously had held funds in checking accounts and putting them into net new accounts. So in this case, what you see is that banks are using fintech as a free innovation ground. They're saying, hey, there's profit over there. Maybe I could go get it. Second is distribution partnerships. So we're seeing more and more of these where banks are distributing fintech products. This could be in the case of, say, on-deck capital, where business loans are being distributed by banks like Chase to their business customers, instead of Chase building that full business stack there. We see a lot of infrastructure and capital providers, a lot of infrastructure and capital being provided by the banks. So things like access to the payment rails or capital. There's a bunch of large banks that are now providing lending capital to a lot of the consumer lenders. Banks are also increasingly investing in companies. I think I heard that RBC had invested in one of the companies that was here previously. Banks like American Express, Goldman Sachs, and Citi are getting very active as fintech investors. And then the last one is we're actually seeing an increasing trend of acquisitions coming in the fintech space. I'm not sure if any of you know what Clarity Money is, but they just got acquired by Goldman Sachs for something like $100 million. And so we're seeing this increasing trend of the large banks saying, hey, I want that user experience. I want to go deliver something to my customers that's better differentiated, and that maybe my internal tech team isn't going to build as fast as I could get it if I just bought it. So that's a lot of what we're seeing. That's kind of it for us. Just wanted to say thank you all for the time. This has been a really fun event. I've had a lot of fun learning a little bit more about the Canadian market. And I think I have now 50 seconds for questions, or does that come later? 4 minutes for questions later. Okay, awesome. Thank you all. I stayed here. Questions are now. Okay.
Hi, Zach. My name is Nick. Welcome to Toronto. 4 years ago, you had an idea. You built a company. You convinced the investor. You got $50 million. I want to ask, what was the differentiation, the idea that you had? Because Udly is there. They are since 1999, and they are a very big company. What's the difference between Plaid and Udly?
Yeah, so Plaid was kind of founded by accident, actually. So my co-founder and I, who's one of my really close friends, we'd built a consumer financial product. Actually, a bunch of them. We had this theory that consumers would live better financial lives if they were able to better understand their finances. This really rings true with a lot of the mission of Plaid today, but the number one stress in most consumers is financial stress. A lot of it's because people don't have as much money as they might hope they do, but another big reason is that they don't have the clarity or the understanding of their financial data. And so we built a series of consumer apps to help people better understand their finances, budgeting, savings recommendations, things like that. And ultimately, the back end was the hardest problem for us. Integrating with the banks was impossibly difficult. We did integrate with a bunch of the existing providers at the time, but ultimately ended up building our own integrations to the financial institutions and found that they were just so much better. It actually kind of differentially allowed us to build a dramatically better product. And so when we started talking to other folks in the industry, they kind of said to us, hey, can we license what you've done? It enables us to go create the things that we want to create. Venmo is one of our first customers. Actually, a friend of mine ran engineering there, and he said, hey, can we license your backend? Your app's pretty terrible, but your backend's interesting. And so that's kind of how we ended up launching a company. It was great to launch with initial customer demand, which we got really lucky to find. If you want to just shout, I can repeat the question.
Hi, I wanted to confirm if you plan to launch on Canada.
Not at this time. We're not talking about that right now. Perhaps eventually.
Hey, great talk, by the way. Not too long ago, Plaid issued a request for startups. And I was wondering what you think are some of the most underserved areas still.
Oh, man. There's a lot of it. So how about this? I'm not going to say underserved because I'm sure that startups are serving and I just don't know about it. But some of the most exciting trends that we're starting to see or niches that we're starting to emerge. One of the biggest ones is just automation. So automation of all of the financial things that happen in your life. We're seeing this convergence of, so there's been a bunch of applications that help you manage your bill pay, either negotiating your bills down, identifying where you have recurring bill pay, and canceling bills that you don't want to spend money on. We've seen a trend of people having automatic savings, so companies like Digit or Capital, where you're automatically investing a certain amount of money, or in the case of Acorns, or automatically transferring a certain amount of it into a savings account. And we see a lot of kind of recommendation tools, be that a chatbot or kind of other financial analysis tools. And my hunch is that over the next year, we're going to see a huge convergence of all of those into a single entity that does a lot of your financial management in an automated way. So I'm guessing that space is going to emerge. Also, each of those three spaces, we see a lot of new startup and frankly, a lot of demand from consumers. We're also going to do another RFS at some point soon, so think of your ideas. Any last questions?
Last question.
Hi, great talk. Question for Ido. Plaid seems to be a very good solution for an environment where something like PSD2 is in place. So 2 questions in 1. Do you think that it's going to happen in the US? And 2, if yes, when?
If yes, when? Is that the second part?
Yeah.
Yeah, so the short answer is no, I don't think PSD2 is going to occur in the US. The reason is that the long tail of banks is so large that applying any sort of like universal standard or universal requirement specifically to a lot of the smaller community banks and credit unions is going to be almost impossible, and I don't think that politically that'll go through. Not to say that it shouldn't. I love the concept of PSD2. Frankly, it makes our life a lot easier. But I don't think that it will. That said, one of the things that we started talking about early this year was we want to have a commitment, early last year, we want to have a commitment to every person in the US that has a bank account to be able to use all the applications they want to use. I actually grew up in a small town and had a really small bank. And when I got my first job, I had to go switch bank accounts because my bank didn't work with all the things I wanted to work with. And so our commitment last year was to say, no, let's get all of those banks up and running with Plaid. And actually, we ended up getting my small bank up and running with Plaid by the end of the year. So it felt really good. Yeah. Anyway, thank you all.